So Bitcoin saw a massive dump after faking us out, trying to invalidate that head and shoulders pattern. Ever since touching the 102K level, Bitcoin has since dumped all the way down to 95K. Now, obviously, the market reacted quite negatively to this, and altcoins are down a lot. But does this mean that the bull market is over? Or is this just your typical bull market dip before we move on much higher? In today's video, we won't just be going over what is happening with Bitcoin, but I'll also be sharing with you some alpha-packed data points to help you make the most of this bull market. As usual, if you enjoyed the content, make sure to smash that like button, subscribe. Let's jump right into the video. So let's kick us off with a quick market update on Bitcoin. As we can see, we pumped all the way up to the 102.5K level, only to come down, touching under $95,000 at the time of recording this video. Now, this was always a possibility because Bitcoin was forming a very prominent head and shoulders pattern. Now, we almost made it out of the woodworks. In yesterday's video, you'll notice that I talked about the fact that we just needed a strong daily close above the 100K level and to retest it as support. We succeeded in the first step, having a daily close at $102,000. But when it came to the retest of the 100K level, you can see that we fell flat on our face. As the breakout got invalidated at the 100K level, we were able to enter a short, and now we are in significant profits. If you took the trade with me on this channel, congratulations. I hope you secure some profits. And just a reminder, if you want to make some of the trades that I talk about on this channel, make sure to sign up to Weeks, which is one of the top crypto exchanges in the industry. It's the first link in my description, and if you sign up with my link and my link alone, you can earn up to $20,000 in bonuses for making these trades. So if we go back to the Bitcoin chart, we can see that we are currently at a very important support level, and we have held this level as support between $93,000 to $95,000 on multiple occasions. But that being said, seeing how prominent this head and shoulders pattern is, it wouldn't surprise me if we went lower. And the other thing you'll notice is that we did touch the 91.5K level on multiple occasions as well, holding it as support. So these patterns are always nice for trading opportunities, but the real question that you might have is, why did the crypto market dump yesterday? Well, as Miles put it on his Twitter, the US data came in hot, causing a bond yield spike. The ISM index was higher than expected, and the JOLTS job openings increased. Now, if we scroll down here a little bit, we can see that the first comment talks about quantitative tightening, which is a concept that I've been talking about on this channel for a very long time. He says the first quantitative tightening bull market in history. This cycle was never going to be like the others. While I am hopeful that we will get quantitative easing, in other words, money printing in 2025 to fuel the market higher, this comment isn't necessarily true, saying that this cycle was never going to be like the others. Because if we take a look at this chart, we can see here that the current market cycle is actually tracking the last two market cycles quite closely. And if we look at it a little bit further, we can see that we're kind of tracking the 2017 cycle the most. And 2017 saw a massive dip around this period before exploding much higher. Now, this chart that I'm showing you here is the Bitcoin market cycle bottom ROI. So it basically measures the ROI of Bitcoin taken from the bottom of the bear market. And this cycle is represented by the pink line on this chart, suggesting that we are exactly where we need to be at this point in the cycle. It might not feel like it, but you just can't let these dips shake you out. Now, talking about some more macro data points, we can see that Benjamin Cowan has put out some predictions for what will happen when the employment rate data comes out. So if we're at 4.2% or less, Bitcoin can continue higher. If we're at 4.3%, Bitcoin can chop around for another month before deciding, and if we're at 4.4% or greater, Bitcoin will likely get a correction. Now, something that's been pretty interesting to see during this bull market is that Bitcoin would kind of chop around a little bit right before we get the unemployment data. And if the unemployment data was neutral or positive, Bitcoin would then move on higher. But if the unemployment data comes out to be negative, Bitcoin would then move on lower. And this would, of course, not just be the case for Bitcoin and crypto, but also for the stock market. And with that dump that we saw yesterday, obviously a ton of leverage positions were liquidated. We can see that over the past 24 hours, over $600 million worth of longs were liquidated, while only $84 million worth of shorts were liquidated. And if we take a look at the total crypto market cap, excluding Bitcoin and Ethereum, we can see that we had another little dump here on the daily time frame. Now, the all-time high is around 1.15 trillion. I firmly believe that we will eventually break this level, this bull market, and it will lead altcoins into price discovery. But for now, we've been experiencing a little bit of resistance around the $1 trillion level, as we can see here on this chart. And for Bitcoin dominance, we can see that we're kind of just chopping around these levels as predicted. I don't think that we will see a significant breakdown of Bitcoin dominance quite yet, especially with the current macro outlook. Now, this isn't necessarily bearish because I do think that Bitcoin dominance will break down and we will have the altcoin season that we're hoping for, but we just require a little bit of patience, especially because we are still in quantitative tightening. I do have to take this opportunity to give you a little bit of reminder as to what we've seen in previous bull markets, and that is the fact that 30% dips in bull markets are perfectly normal. And just to give you a little bit of perspective as to how low we went on our dip during the holidays, we only dropped from $108,000 down to around the 91.2K level, which is about a 15.7% dip. Guys, if this is your first bull market, you need to understand that these dips are perfectly normal. And in fact, as I put it on my Twitter account, we can see that if we were to drop 30% from these levels, it would put Bitcoin all the way down to just around $76,000. Now, I know that might sound crazy to you, but it is entirely a possibility. I'm not saying it necessarily has to happen, but it should be on your radar because historically, 30% dips are part of the bull market. And the other thing that's interesting below 80K is not only does it match the exact breakout point for Bitcoin going up to 100K, but it also tends to align with where the bull market support band is. And as we've been discussing in my previous videos, Bitcoin always checks into the bull market support band at some point in the bull market. Otherwise, it can't create enough fuel to move on higher. Now, it doesn't mean that we have to drop immediately, but I am expecting at some point for at least the bull market support band to catch up to the price of Bitcoin and for us to tap into it. So obviously this band is far below the current price of Bitcoin, meaning that if Bitcoin just hovers around these levels, it will catch up to Bitcoin, and that could be the retest that we're looking for. Or if the Bitcoin drop continues, it can check into the bull market support band. And if we bounce on much higher from there, it could fuel the next massive rally for Bitcoin and the rest of the crypto market. And just a reminder here, I know you might not like what I'm talking about, but I'm just keeping you open to all the possibilities. This isn't FUD, it's just a reality check. Go back and look at some of the charts. Every bull market cycle, we have seen 30% dips, and this most recent dip has only been a 15% dip. Please make sure you're aware of this and don't get shaken out, because I think that Bitcoin and the rest of the crypto market can move much higher into 2025. And next up, I have to pull up the ETH Bitcoin chart. We can see that we're kind of just chopping around these range lows. Now, I'm not quite sure if Ethereum will put in a lower low, but 0.03 is entirely a possibility for ETH Bitcoin, especially with these current macro conditions and how the stock market has dropped. But if you ignore the short term, on a more positive note, we can see that historically during the post-halving year, ETH performs extremely well. For example, 2016 was a halving year. In 2017, ETH went up over 500% in Q1, over 400% in Q2, and kept on going up, making 158% growth in Q4 of the post-halving year. Then, if we take a look at 2020, which was a halving year, the next year after, ETH went up 170% in Q1 and kept on going up over the course of the year. And now, as we know, 2024 was a halving year, and we're currently in 2025, which is a post-halving year. Well, seasonality would indicate that Ethereum will have a very solid year ahead of it. And I'm willing to bet that over the course of this next year, Ethereum will outperform Bitcoin. You just need to be a little bit patient. And the reason why I'm always talking about Ethereum Bitcoin is because Ethereum leads the rest of the altcoin market. Now, can we see some altcoins outperforming when Ethereum isn't in an uptrend? Yes, of course, that's always a possibility. But for the broader altcoin market, we need to see Ethereum in an uptrend to see significant outperformance from alts. And I think that this year, 2025, is the year where it happens. Now, some more data on the Bitcoin spot ETFs. We can see that BlackRock's ETF is still accumulating heavily, despite the fact that basically all the other Bitcoin spot ETFs have seen significant outflows. That is very interesting data to see, and it suggests that BlackRock's clients are accumulating heavily. Another very interesting chart that gives you a little bit more perspective as to where we are in the current market cycle is taking a look at the Bitcoin yearly candles. Now, I really like the way that Rec Capital has differentiated this chart with 4 specific candles. The first candle actually represents the last stages of the bull market, seeing the most explosive growth in the crypto asset class, then leading into the second candle, which is the red one, obviously the bear market. Then we go into the start of the bull market at candle 3, then continued into candle 4, and then we finish off the bull market with a huge candle number 1 before we enter the next bear market. And we can see this every single market cycle. Now, what he's suggesting on this chart here is that we saw in 2022 a bear market, then in 2023 we saw the first stages of growth in the bull market, which was candle 3. Candle 4 coincided with 2024, and now we are back to candle 1, which is 2025, ideally the biggest green candle for this bull market before we enter a bear market in 2026. This over here suggests to me that we are still about to enter the most explosive phase of the bull market and reach peak euphoria before we come crashing down into a bear market. Now, I know it could get quite complicated on navigating these markets, but it's truly, in my opinion, an infinite money glitch. And you might think it's funny that I say that, but look, the price of Bitcoin has been increasing tremendously since 2013, despite these brutal 60 to 85% bear markets. Now, my strategy during these markets is to sell my crypto near the top of the bull market and to reaccumulate most of my crypto near the bottom of the bear market. Now, we'll never get the perfect tops and we'll never get the perfect bottoms, but we've been pretty damn close. For this cycle, I accumulated most of my Bitcoin between $18,000 and $22,000. And this is why it's so easy for me to stay level-headed when we have dips, because I know that I accumulated near the bear market bottoms and I'm planning to sell much higher before reaccumulating in the bear market bottom. Remember, the goal here is to multiply your capital. So when you lock in your gains near the bull market top, you're able to buy way more Bitcoin specifically at the bear market bottom, thus multiplying your capital every 4-year cycle. But anyways, as we approach the latter stages of this bull market, if you want to know when I'm selling most of my crypto near the bull market top and rebuying near the bear market bottom, make sure to subscribe to this channel where I will be sharing it with you immediately. And just to make you a little bit more bullish here, we can see that this is a chart of the dollar after Trump's election. So in 2016, when he got elected, shortly afterwards, the dollar topped out and came crashing down. Now, the reason why this is significant for us is because crypto tends to be inversely correlated with the dollar. So if the dollar comes crashing down, that's usually very good for risk assets like crypto. And Trump's official inauguration is on January 20th, suggesting that the dollar could be close to topping out very soon. And once the dollar starts its downtrend, this is going to be very bullish for crypto this year. And some more alpha for you here. We can see that the crypto market overall goes in an uptrend after inauguration. So here, after the inauguration in 2017, the total crypto market cap just exploded to the upside. And yes, down here, this chart suggests that altcoins were outperforming Bitcoin, which is what we finally want to see. Then after the inauguration in 2021, the same thing happened. The total crypto market cap saw significant upside, and yes, altcoins exploded against Bitcoin. Once again, exactly what we want to see. And now, as we head into the inauguration on January 20th, it's looking like the same thing is about to occur. Total crypto market cap should likely break much higher, and altcoins will finally be outperforming Bitcoin. And based on our Ethereum analysis earlier on in the video suggesting that ETH performs well in the post-halving years, the stars look to be really aligned and we should have an exciting 2025 ahead, despite these market shakeouts. And while I still hold a significant spot bag during these market shakeouts, it's also an amazing opportunity to trade crypto, whether the price goes up or down. And once again, if you're looking to trade crypto, I would highly recommend you sign up to Weeks, which is the first link in my description. Again, you can earn up to $20,000 in bonuses just for trading the markets as you normally would. First link in my description. And to wrap up the video, I'll leave you with this. Don't forget who's going to win long term. But in all seriousness, you have to remember why you're in the altcoin market. It's to make gains so you can multiply your capital and acquire more Bitcoin. At least that's what I'm doing. Most of the altcoins that we tend to invest in during the bull market bleed against Bitcoin over the long term. So in my opinion, they're only supposed to be used as a tool to accumulate your capital and be able to accumulate more Bitcoin. That is exactly what I do every single bull market cycle, and it hasn't failed me yet. And that sums up today's quick video. So Bitcoin tried to break out of this right shoulder on the head and shoulders pattern, but it has failed, and we have now fallen below $100,000, tagging below 95K. Is there a possibility we go lower? Yes, but these dips should be seen as opportunities, especially if Bitcoin decides to check into the bull market support band below the 80K level in the coming weeks. Regardless of what happens in the immediate short term, I think that Bitcoin will move much higher this year, and overall, Ethereum and altcoins will outperform Bitcoin in 2025 up until the bull market peak, and we should see another bear market in 2026. If you enjoyed the content, make sure to smash that like button, subscribe, and I'll see you in the next video.